Hello, context traders. I want to go over with you today a couple of really important concepts. So, I want to talk about a position three opening and how I use both overnight sessions and the regular session to help make my decisions. And then I want to talk about the opening range breakout. But more importantly, I really want to highlight the range reclaim. So there's a lot of people on YouTube talking about opening range breakouts, and I love the orb. All right. I trade a 2 minute orb, I trade a 5 minute orb, I'll trade the 15 minute orb. I love opening ranges. I love those early initial moves, and I'm looking for those retest opportunities. But one that often goes overlooked is the reclaim and the power in the reclaim whenever we get back into range. Okay. So let's jump right in here. I'm looking at June 13th, 2025. If those of you want to follow along on your charts. And just to show you, I was seeing how we had this sharp decline in the overnights. We were going to gap down fairly significantly. So I was looking at this as a position three open. Okay. A position three open, we have wide separation from the price. And you can see that we had the price coming out here on this 2 minute chart from a narrow state. And often out of the narrow state, we get the most power, we get the biggest impulse. And we see that shoot down and it opens clear away from the moving averages. Now, it is absolutely possible that we get some sort of a chop and drop, some sort of a move here, continuation to the downside. But my initial thought is typically we're going to have that attempt to take out some of the gap. All right. So I'm looking at my overnight. So I have my futures chart up here. I have that alongside my QQQ 5-2. I have my 1 minute here, my futures chart. And you can see that we had a narrow state forming here in the 1 minute, I'm sorry, as we were moving into the open. And I already had a bias to the upside. So I was looking to try to get in here. So I see this range just before open, and we're starting to move up, and we see this nice impulse candle clears the 200. So I get in on this impulse candle here, and I decided to trade the futures because I wanted to try to get that head start into the market, right? So I got into futures, did not trade options today, only traded the futures, the NQ, the MNQ, which mirrors UQQ. Um, I usually have them all up. I have options and in my matrix running on one screen, on the other, I have my futures chart. So they move in sync, they just move at different levels for those of you who are unfamiliar with this. All right. So we're in here and we come into that opening bar and boom, we just take off. Right. So we see an open, boom, strong candle, start to hesitate. And this was such a big move. I'm expecting some sort of a pullback, likely a pullback and continuation. But with that big vertical launch, and we're moving into, let's see, fib wise, I believe we were running into around the halfway point as well. So if we go to the close right there. So yeah, we're getting into 38.2, close to the 50, up a little bit higher, but this is a good place for a rejection or a pullback. So I exited right here on this indecision candle, went ahead and took my profit and ran there. This was a beautiful trade. This was over 100 point trade. All right. So we moved from 527.30 and one bar all the way up to 529.66. And I got out here. Now we did get that first pullback and 10 EMA touch to go up, make a new high. Then we pull back. We got one more pop up and fail. I did get into a put position a little bit later um, in the morning. I took this initial 10 touch, got back in, got out. Um, so typically that type of impulse, we're going to pull back. If it crashes through, I'm expecting it to try to come all the way back down. But because we found support here on the first touch, I'm expecting this to at least come back and try to make that four pattern so that we have that kind of a look. So I did catch a little bit more on that move. And then I let this go. I didn't take this 21 touch. I didn't take these initial puts. I knew we had news coming up at 10 a.m. Eastern. So waited to see what was going to happen here. And the fact that we start to see our moving averages catching up now, we're still hovering in that 38.2 to 23.6 zone. This is starting to look to me like a better place for a reversal. And so I got in into puts here in 10:08 2-minute candle. So I was right in here. We tried to fire off, shot back down, pushed up. This next candle went up, started to push down, and I was in short as this candle here at the 10:09 actually candle was shooting back down and clearing the body of the previous candle. And so we see this 10 EMA, my 21, everything's curling down, and then boom, right into that 200. Now, when we get a hard slam into the 200, oftentimes it does bounce off, but I'm expecting it to be more of that pop to then drop right through the floor. Like think of this one as like dropping a bowling ball from a high height and just bang, and it crashes and it breaks the floor and it bounces up. We catch off that 10 and then slam right back through it, right? We bounce again. Now we're under it. We have the narrow stayed down. We're under, and we drop even lower, and we cleared out that whole range from where we started the move. So I was in these puts all the way down into here. I thought that there was a chance that we would pull up, hold under the structure, and go lower, maybe start attacking some of the lower areas of interest from previous days. But we did not get that. This was ended up being enough liquidity down here to recharge and start to move back up. So I was looking at this. I was eyeballing this like a hawk right here in this area. Probably let the hopamine get me a little bit because I did think this looked really good to potentially take off and at least come back into this range. But I held and I didn't get out of those puts until this bar right here. This is the 1032 bar, shot up, took out those previous two candles, wick, and that was ideal entry would have been as that bar was coming up. If I missed that entry, got out of my puts right there. However, once we got up and reclaimed our initial opening position low, right? So we open, we drop, we push up. Once we reclaim this area right here, I'm gonna take this fib off. Once we reclaim this area, I'm feeling pretty good that this is going to try to attack the moving averages, right? So remember, context is everything. We dipped lower. We came down here. There's got to be stops and orders in here. We came in, we wicked down, we took out those orders, we got that power to get back up, and we cleared this area right here. So we get back in here, we start to come up, and boom, I'm in this one. As this bar is coming up, we crash right through, took profit on this wick as we got back into this area here. So we get into this area. You see this is the last up close candle before the downturn. So we got into there, we wicked all the way to the top of that box, started to pull back, and I took some profit off there. And I was really counting on this scoop and score look right in here that I have highlighted. And it could have crashed right through, could have come all the way back into my entry area. That's fine. I took profit here. I'm at break even now. We pull back in, and as this scoop and score look is starting to roll back up, I hit this one with my original um, scale and an additional lot. So now I'm in for bigger position here. I already took some profit on this pullback, and I am really confident this is going to come back to at least this area, if not higher. So I'm feeling very confident here. So as this bar is taken off, I move all of it up, stop just below these candles, and I'm waiting to see what happens here. All right. So we crash on up. We have this beautiful move up all the way in with a narrowing state back into the 200. Now, here's something I want to show everybody. This is really important to consider. Most of your power moves are going to have at least a 3 push drive. Okay. So they might have a fourth, they might have a fifth, maybe every once in a while a sixth and a seventh. Those are unlikely. They don't happen very often. Occasionally you get a one, two, three and fail. That's why Tom uh, always talks about if you can count to three, you can do really well because you can almost count on the one, two, three. But usually you're going to get that initial or that additional push or strong move. So look at what we have here. We have one, we have a pullback, we have two, we go flat, three, four, actually got 5 pushes there. Right? One, pullback, two, flat, three, pullback, four, flat, five. Now, you could consider this one sweeping move because this was just a slow pause here. If you wanted to count it like that, it'd be a one, two, three, flat, four, up, flat, right? But I'm expecting after this pullback, this next run should be as good as the initial run, right? We should at least see it finish similar to how it started. In fact, it did that and then some. So this was a really nice move, moving back into that narrow state. So I ended up riding this one out. I did scale here and I took some off here. And then I held and I didn't close until right there, actually. I was thinking of getting out here if it didn't crash through, but I saw we bounced in that area. And so I thought there was a chance we could reclaim, boom, and go. But when it failed here, I was all out. Okay, so that was it for me for the day. There was obviously some great puts here as we brought it all the way back down. But this is what the other concept I wanted to share with you real quick today. Now, a lot of people teach the opening range breakout. The idea of the opening range breakout, whether it be the 5, 15, the 2, whatever it is you're doing, is you're looking for that break, close, and that retest to then continue in the direction of the range breakout. So we could see we had it here. We came down, we closed below. You got a retest, an extension. That was about $1 drop, right? 527.24, 526.16. So you have a nice normal dollar move, pretty simple. Catch that one through. But this is what I want to show. Whenever we get the range reclaim, so we crashed out, we didn't get that continuation to the downside. Instead, we get back into the range. And how often this reclaim will come back to at least the midpoint, if not the upper portion of the range. Now, it might fail when it gets up here because obviously there was some power to send it down, but be aware of this. And then this is not necessarily normal, but this is an interesting day. We got the break below, we climb back in, and we take it clear to the other upper side of the range. All right, this is the 15-minute range. It's primarily the 5-minute range as well. 15 minutes just a little bit bigger. But we get outside the 5 and the 15-minute range. What do we get? We get the retest and we take off. We go higher. We go chop around up here in a little bit. We're hanging out. We reach back inside the range, retest, and then boom, all the way through the bottom of the range again. So again, I don't want to say that you're always going to go from range to range low to range high to range low. Oftentimes it will come back maybe just to the midpoint and then fail and continue. But anytime you get this reclaiming of the range, that's a fairly strong move. And oftentimes you're going to see it try to fight its way back up. Now, too often, traders are trying to play in the middle, right? We want to avoid the middle. We want to play from the bottom and top of the ranges because that's what ranges are. They tend to bounce back and forth between them. So if we can get in here as it's powering up, we can take it back to the mid point. We can take profit, we can move our stops up, and we can see if it continues through the other side. That is powerful when it breaks, retests, and goes. Another thing you often see is with these ranges is oftentimes the you can see at least half of the range will be the extension below or above the range. So let's take a look at that. So if we go fib here, all right, so we break out below the range, we get to about 40%. We break out of the top of the range, we get to 50%. So you see, we got close to that mark, both directions. But then where's the real money? The real money was made from taking it below the range to the top, top of the range to the bottom. So it's just something to keep an eye on. Again, none of these things are going to happen every time, all the time. It's just something to be aware of. Add it to your consideration set. Think about these commonalities, these things that happen frequently. Make this part of your overall context reading and understanding, right? We don't want to get tied into chasing patterns all the time. If we chase every single pattern, we're going to get cut up. We're going to get sliced and diced and we're going to get chewed up by the market. So we really need to be thinking about context, what's going on, where are the orders, where's the liquidity, and then we layer in these patterns. All right, everyone. I hope that helped. Again, thinking about where we're opening, where we're at in positions, and thinking about how we're playing these ranges. As always, everyone, please drop a comment in there. Let me know if you learned something. Let me know if you would like me to go in depth on something else more. I'm going to start trying to do more videos on concepts and topics rather than just going through daily walkthroughs. And so anything that would help you out in your trading journey, drop that in there. Let me know. All right. So, everyone, thank you for your attention. And until next time, happy trading.